We've got another guest host. We've got Gemma Godfrey in the studio for the rest of the hour, head of research at Credo Capital. Fantastic guest today. Thanks for coming in, Gemma. We encourage you to get involved here at the top of the program, either on Twitter or on email. How are you, Gemma, and what are your thoughts on the markets?
Well, I'm very good, thank you. I'm slightly better than the markets at the moment. I mean, the markets, we are seeing them being buoyed slightly by bargain hunters, but there are a lot of headwinds still coming out there. There are still macro shocks that are moving the markets, and although these bargain hunters are coming in sporadically into the markets, you've still got a lot of uncertainty that investors are very cautious of.
How long are we going to stay with this? I mean, we're now in September, not traditionally a great month for limiting volatility. How long is this going to stay with us?
It was in 09 and 10. We saw some pretty nice gains in September.
I'm talking about volatility rather than the absolute market direction. What is it going to take to sort of have some calmer trading? You know, do you see that happening or not?
Well, the markets are looking for clarity. And until that point, the markets are going to continue to be volatile. And it's very funny because the saying was sell in May, and it was meant to be the summer months were meant to be volatile, and actually we've seen that continue. But on substantial volume, which shows that it's not just because people have been away, but people are very cautious. So we're looking at the sovereign debt crises, we looked at the poor unemployment figures that came out of the US, and there are still these shocks that are surprising the markets.
I don't think so. I mean, UK has come back on St Ledger Day, and we haven't had the St Ledger yet. Which is up in Doncaster, so I think we've still got a couple of days before we get to St Ledger. I will find out the date of St Ledger,
but we haven't had it.
Well, no, the phrase in UK is sell in May, come back on St Ledger Day. The St Ledger is a race, a horse race, I should say, in Doncaster. So, and we haven't had the St Ledger yet. So actually, on that phrase, we are not. It is not yet time to come back into the market.
So bring out the horses, right? Is what you're saying.
So I will confirm when that St Ledger race day is.
Good. Gemma, loads of viewers writing in, many of them asking just simply about where to find value. Do you think that is it too early to enter into some of the so-called value plays now, i.e. the big stocks that have been sold off quite significantly?
I mean, it's always good to remain opportunistic. Yes, exactly. And I think you know, when people are selling off across the board, it's a fantastic opportunity to pick up quite interesting opportunities. You have to have a longer-term time horizon, and you have to be prepared to kind of close your eyes a little bit for the short to medium term. But there are some interesting opportunities that are out there.
The St Ledger is 1 day, 19 hours and 46 minutes away.
Okay.
So that takes us to Wednesday afternoon.
That doesn't do much.
Right, that takes us to Wednesday afternoon. So theoretically, Wednesday afternoon, that's when we have to decide whether that's the moment to come back in.
Well, hopefully all the European governments and also in the US and the UK, hopefully governments are focusing on that, and actually by tomorrow we'll have lots of clarity.
Gemma, with regards to, I mean, we've just had an August that was absolutely atrocious for loads of people. The German market off by some 20%, UK market off by almost 10%, a bit less. Do we just leave equities and instead try to find fixed income value plays? And I mean, we just had a guest suggesting what short French 10 years versus the Dutch 10-year, or is fixed income equally as volatile at the moment?
I mean, at this point, I would say that having a diverse portfolio is going to be key. So actually maintaining an exposure to various asset classes that hopefully will move slightly in different directions is going to benefit you over the longer term, as opposed to going all into equities or all into fixed income. I think you have to be very particular where you invest your money, but within that there are still good opportunities. For example, if we look to the US, look at US endowments, what they've decided to do is actually reduce their allocation to developed market equities and fixed income, and actually they're going more into hedge funds, which is quite an interesting play. And the reason behind that is that until there's clarity, until they gain confidence where the equity markets are going, hedge funds that potentially, again, you have to be very strategy specific, could produce income no matter the different economic environments.
All right, Gemma, stick around, more to come from you.
Are you saying that you're seeing an end to the write-downs? Because obviously we saw Commerzbank come out and they wrote off, I think it's 730 million euros because of their exposure to obviously periphery debt, and that wiped out their entire Q3 earnings. And RBS as well have written down about 733 million so far this year. Are you saying that you see an end to this, or because this is a severe headwind that might continue?
Yeah, no, absolutely. I definitely don't think there's going to be a headwind. I mean, I definitely there's going to be an end outright to the write-offs. Absolutely not. But what you have now is a UK banking sector on about 0.3 times book. I think what we're going to see is that 0.3 times will clearly be undone by write-downs. But do I see a situation whereby today I think banks are trading above 1 times adjusted book for all these write-downs? No, I don't, actually. So I still think we see a scenario whereby banks, if we can write off Portugal, Ireland and Greece, still reside below book value today. And do we have case studies in history whereby banks can rally from below book value? I think we do.